Well. Hello again from another exciting episode of the Crotchety Old Men podcast. I'm Gary Smith, one of the co-hosts, and joining me today is one of my comrades, Mr. George Crumley. How you doing, George?
I'm doing great as usual, Smitty. It's Monday morning. I'm ready to go.
All right. So, man, we got an exciting episode today, this afternoon, depending upon whatever hemisphere you're tuning in. Our guest needs no introduction, but we're going to give him a reintroduction because he's a recurring guest. And we're really excited today with the topic because it certainly is timely. And if you don't have pen and paper or a recorder, of course, we're on YouTube, iHeart, and all the other podcast venues. But I encourage you, take that pen and paper out and take some notes because it's going to be a note-taking day today. So I'm going to pass it on over to George and let him introduce our guest, and then we're going to get right into the podcast.
Oh, absolutely. Good morning, special guest. You know, it's a returning guest, as he reminded us, and it's good. I think we kicked off 2025 with him also. Andre Osborne is here to talk to us this morning about the precious metals that you've been hearing so much about in the news. He's an expert. He's a great opportunity for those that want to invest in precious metals. And without further ado, I'm going to turn it over to Andre. Andre, how you doing this morning, man?
Thank you for having me, gentlemen. I always feel honored to come here. I get to talk about what I do, all day, every day. But you guys are motivated, and your audience appreciates the content. So, to go where you're appreciated and loved. Thank you for having me beginning of the year, top of the year. You're going to get the conversation that I was supposed to have at the end of last year. But the recap, where we are, where markets are. Precious metals have gone more mainstream, I would say, or retail. This is something that people have been doing for generations, but the general public in the United States specifically, I'm going to say, is really starting to have a high demand, high desire, and I would say some concern about where markets are. And precious metals are here to provide you with the safety that you're looking for, peace of mind.
Amen. Yeah. All right.
Well, let's kind of start there because you've been in business for quite a while. Alex Lexington Precious Metals is your company, and I know you primarily deal in gold and silvers. But those that have been watching the market, watching AI, and watching some of the stocks take off, they're hearing certain buzzwords because silver and brass have taken off, like we haven't seen in years. And then gold has just gone through the ceiling. I mean, I was looking at it a few minutes ago. It's over $4,000 an ounce. So let's kind of talk there and kind of give us a high level perspective of how you see the industry, how your business is moving. And let's just start kind of right there.
Okay, so last year, so Alex Lexington provides a number of services. We sell coins and bullion. You can go on our website, you can see live pricing. A lot of our clients are more like in person. We interact with them. They come in, we do a consultation. We also purchase coins and bullion. We purchase all the precious metals, which are gold, silver, platinum, palladium, just to give a rundown. We have a jewelry division to our business. We have the invest side and we have the indulge side. So that's who we are, what we do, the different services. Last year, I would say silver had a breakout. Well, first of all, gold had a breakout beginning of the year. Let's not just schmooze over the fact that gold doubled in value, 50%, easy. I'm looking at the markets right now. Gold has catapulted. I'm looking at $4,600, literally all-time highs. While we're having this conversation, goes up $107. So for all my traditional investors, people that say, hey, I only do mutual funds, et cetera, I used to always say, gold and silver are not here to be your market, your portfolio drivers. At least previously it wasn't. Now it's something that people are like, hey, I got to get my hands on some. During COVID, when people were saying $2,000 was too high for gold, I said the money was printed. We forget the government started printing money at a very high clip. I think they printed like a certain percentage of money in the last 5 to 10 years than they've ever printed in existence, from talking about US dollars. And that has, made it so we will never go back below a certain dollar amount, ever. I don't care what happens to the market. That's just the cost of living. People used to say that's not realistic. I said, okay, $100 at the grocery store. What does that get you? I know everybody feels the pinch. I don't care what level of money you're at. My clients range from check to check to they can go buy a plane. Anything is possible, but everybody's feeling it. And I know you're feeling it at least 15 to 25% of your budget. Easy. So imagine what metals are doing. Silver's quadrupled. Gold has doubled. And where we're going, the sky's the ceiling right now. It is what it is, and we're going to be here. So, does that give you, a quick overview? Well, and I'm sorry, last thing. Last year, the demand increased significantly to the point where, we were at appointment only, and we're still pushing appointments because we can't get enough people. We can't get all the people in sometimes in the day that want to come see us. So our thing is education. Our customers want to sit down and talk to us. I've never done this before. I'm taking money out of 401ks. These are the conversations that we're having with people. A lot of retirement funds, a lot of people that have never done this, and they say, I waited so long to do this. And a lot of our clients are, regular people too, but they're doing 6 figures, high 6 figures. I had my first 7-figure customer last year. So we can supply it. The demand is so high, like silver's like a 2 to 4 week wait right now. And that's from week of Christmas till now. Some of my clients are just getting their orders in based on the holiday, which kind of slowed it down, but still demand is 2 to 4 weeks. So questions? I know I'm talking a lot.
No, it's okay. It's okay. When you're talking, when you open your mouth with people, we're listening. But some of the things that you just said has, Kurt's brought up some questions on my end, even before you came on this morning. When you're talking about the value and the drivers. And so when we delve down and we look at what is the drivers, what's driving that market, certainly there's been a surge in factors like, the geopolitical tensions. All right. What I call the fear factor. Oh, the world's about to collapse. The currency is going to go away. And if you don't have some gold, you're going to starve and blah, 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 that noise. But you have to look at also what's driving that value. When there's a high demand for something as seemingly as rare as gold, then that's one driver that's going to happen just by a fact. Okay. One of the things I like about math is that the numbers don't lie, right? And so when we look at the extraordinary growth, even compared to the Standard & Poor's 500 index fund, you're correct. Gold has just shot up. Okay. Heck, you're going from 2,600 to last January 2025, gold was around $2,600. Like you said, today it stands at 4,600. That type of growth, number one, I question the sustainability of it. Number two, even though it continues to grow at that rapid pace, at some point it's going to be out of the hands or out of reach for the everyday working Joe, because at $4,600 a troy ounce for gold, unless they got it in their teeth, like I see a lot of people south of the Mason-Dixon line, they wearing it. But help me with this driver. I just mentioned one about the geopolitical tensions. You got Venezuela, you got the Iran unrest, concerns about the Federal Reserve independence. And so can you speak on that? What's really driving it other than this fear of, let's get our gold?
So there's a lot of things that are real. The initial starter catalyst last year was tariffs. I have customers that are in real world function import-export businesses. One guy came in last week. He's in specialty tools. He said they're out of Germany, Switzerland, and they import to the United States and go other places around the world. They didn't know if they were going to be charged 26%, 16%, and that was bouncing all over the place all year. So companies are concerned. People are trying to hedge. That was the original catalyst that made gold jump through the roof. Arbitrage was, you had companies or the trading houses were trying to bring gold into the United States at a fast clip before certain tariffs rolled out to the places where they were coming from. So gold was being imported the December before into the United States, high rate. That's a fact. You can go look this information up. So coming into January, then gold starts to run, and then other places around the world have higher prices than we do in metals. So then metals start to go out of other places. Silver wasn't really doing anything. All of a sudden, silver starts to run. Now, the demand on silver, that catapulted the woke up one day, the price of silver was like $40-something, then it was $50-something. We literally couldn't buy silver. Our end buyers, people who have been following it to some extent or heard high demand of silver, the silver market broke in mid-October. We literally, for the first time in our existence doing business, my father-in-law has been doing this since the 70s, never ever can't buy silver. Why? The banks can't, the silver banks or the bullion banks, the bullion banks of our industry, the people at the top of the food chain, can't hedge. The spot price of silver went in front of the futures price. What that means is the cart is in front of the horse. If your bank has no FDIC insurance, in our industry, rather than take the loss if the price of silver corrects, they just said, we're not buying it. So from mid-October to like the week before Thanksgiving, we couldn't buy silver. Why? Not because the money's not out there to move, but we don't know what it's going to be. Silver drops $2 an ounce times 100 ounces. Do that at a high clip and you're out of business. So that was something that was very major, crucial. Post Thanksgiving, we started buying. We're getting, from a return perspective, what we can get as within the market is significantly lower percentages on purchasing. So we're buying at around 90% of spot. We used to buy around 95% of spot, sometimes spot, meaning the price of silver in the market on any given day on the bullion, and we were traded above. None of that is happening right now. It's not that demand's not high, but the price is different all over the place depending on what part of the industry you're in. It literally broke the market, and that's silver specifically. Right now, I just got off the phone with one of my market maker end buyers, and he's buying from, like, I'm selling to him, and what we're getting is 93 to 95% depending on the product. Now, somebody say, why am I telling everybody what I'm getting? You need to know, as a dealer, if a dealer can't get more than a certain rate, he can't buy more than a certain rate. There's some people in the market that aren't even buying silver at all. It's not that necessarily you think you have the money, but you'll go broke trying to corner a market very quickly. Hunt Brothers tried to do that historically. So, that's where we are. We are buying silver, we are selling it, but the gap between the buy and the sell is stretched. Silver is today up $5. We're at $85 an ounce. I would say it's insanity, but people would say it's where we should be. It's not that we shouldn't be here. It's the rate at which we got here.
Okay. Well, speaking of spot, all right, because there is the arbitrage between what you get at wholesale prices and what's sold at retail.
Correct.
And so, correct me if I'm wrong here, that when we see or hear in the news about gold is at 46.10 today and all that sort of stuff, I don't like that word assumption. So I'm assuming though here that that's the retail price. All right.
So the spot price is the price that we use as, let's just say, the ground floor. Spot price is the price that you see on the ticker. Now, there's spot price and then there's the futures spot price. The future spot price are for traders, paper money. Those are the people, oil, gas, sugar, wheat. Okay, what is it going to be in 6 months? That's the futures price. That's what we also use to hedge on if you're on that upper end of the spectrum, meaning your market makers, your people trading mining, they're using that. If the spot price gets ahead of that price, you're really out there naked. When I buy from a customer and I buy 500 ounces, 100 ounces, I don't necessarily wait for someone to come in my store and purchase it. I don't know what's going to happen tomorrow. We traded a pretty decent clip, I would say, here in Atlanta. That's going to go to a market maker. Then that's going to go someplace else in the country, particularly. I deal with market makers all up and down the East Coast.
Okay.
And
so that,
Texas.
okay. So that kind of gives a leeway, and because spot prices, they're live, and so they can change at any second during the market hours. So the volatility
on Sunday till 4:30 on Friday, I can trade within those hours, and there's even a tighter window which I can function in within that, depending on, from a market perspective, being able to provide service to people.
Okay. So for the everyday American that wants to put gold in their portfolio or what have you, what should they be most concerned about? I mean, obviously, if things go well, in a critical assumption theory is that, all things being considered, if things continue to go up, everybody's happy and we're throwing a party. All right. But considering the volatility that we just spoke of in terms of the spot pricing, and in my mind, I'm not saying everything is manipulated, but when man's involved, especially when there's opportunities for an arbitrage, because you got to look at it. You're in the business to make money. And the larger that spread is, the better it is.
So yes and no. So my sell price, granted, my margins have never been this good, but our margins weren't great to begin with. On gold, on average, so if I were to sell to a client, if I get from my supplier, my on average over spot price is about 4.5%. That's, people think that's a lot of money, or the people would think, oh, that doesn't sound like a lot. It can be decent. Everything's volume.
It can be a lot depending upon the volume.
Yeah, depending on the volume. On silver, you were anywhere from 6 to 10%, depending on the product. Okay, cool. These numbers sound small, but now at higher rates, we make more money, but we're burning the money just as fast because it's taken 4 times as much to buy the same amount of gold and silver. Or I'm sorry, 4 times as much on silver, twice as much on gold. You go broke real fast, you run out of money real quick. And there's always another big deal. So, but to answer your question, right now, demand is high. The premiums are all over the place. You wake up, like I said, gold's up $107 right now. Silver's up $5. $5 is what silver used to move in a quarter. $100 is what gold would move in a month. It's done it on a Monday morning. This might be our new normal. Now, as specifically customers looking to get into the metal space, why this is concerning, the volatility that we're experiencing in the market will trickle down to everyday people in various ways. Electronic devices that we purchase, medical equipment, industrial use case scenarios, buildings, our government uses it for military spec stuff. Data centers are using these things. These AI and tech companies needed this material to stay below a certain price so they can be necessarily profitable. Now that number's gone through the roof. I'm going to put some information that everybody may or may not know. China has cut off all exports to precious metals. So people might say, well, why did China do that? Because there's a demand that they're trying to fill in-house. I'm not going to help build your house if my house needs the resources and materials. That is another component that is causing the market to go crazy. In China and India, places east, they're trading metals at probably, I want to say gold, it might be 1% higher. On silver, it might be $3 or $4 higher. Now, some might say, why does that matter to me? The people that are trading in the United States, or would traditionally have traded on the New York Stock Exchange, the CME, the Chicago Mercantile Exchange, they no longer feel the need to fool with the United States. I'm going to ship it to somebody that's going to give it to me a higher price. That's what everybody else is doing. That means there's less here. That means there's less to build with. The data centers need it. The military needs it. The different people need it. Now there's a vacuum. This is why prices are going to keep going high. BRICS nations, things of that nature. People thought that BRICS was a thing of small countries. De-dollarization. It was something that was in a chat rooms across the internet for the past 5 years. It is live and well at the loudspeaker, speaking to everybody. BRICS nations, de-dollarization is a real factor. It is affecting the way we do business here. If you are looking to get into precious metals, I advise you do it and do it consistently. Don't necessarily look at, oh, it's $4,600 today, and oh, I just lost all my money because it dropped down to $3,500. Buy at $3,500 as well, because you don't know what the long-term effects are going to be. You don't buy one stock of Google. You don't buy one stock of Tesla. You buy multiples. It goes up, great. It goes down, cool. But that's the mindset that people should have to protect their money in the long term.
Yeah, I'm kind of glad that you went there, because that's what I was thinking from an investment perspective is, the drivers. And if you're watching the news every day and you hear about NVIDIA and microtechnologies and all these other companies stock going up, it's primarily because when they make these chips, they need these precious metals to make these chips. And as long as that continues to happen, you're going to continue to see that growth. But, we're obviously more interested in, from a consumer perspective, and how do you get in on that? And is there a benefit in doing that? As you talk about it, at $4,000, that's a lot, for an ounce of gold.
Yes.
But are there ways to get into it, from smaller chunks?
There are what we call fractional pieces. Half ounce. Half ounce is $2,000 and change. Quarter ounce, that's going to be $1,000 and change. 1/10, that's going to be 400. Shoot, that's $400 and change. I'm sorry, because the numbers in my head.
That's all right. I get your point that you can.
Yeah. But my point to people is, get in where you can get in. Stop thinking I need to make huge returns. You need to think I need to protect the money I have. So you might say to yourself, I didn't make a 10% return. Yeah, but your dollar, the value of what you're spending is going down. A dollar is not a dollar. A dollar is more like 75 cents. And a dollar might be 50 cents in 6 months. I'm not saying that's what our dollar is going to be, but people need to think, protect my wealth, as opposed to I'm going to go out here and make huge returns. It may not look like what you think it's going to look, but you're going to wake up one day and appreciate the fact that you made these financial decisions now, which aren't exactly simple. We have options to do things below 1 ounce. One of the components I'm looking to do is add fractional investment capabilities. We're looking to roll out a service where if you have $100, $200, $500, you want to do that, we're gonna say, okay, you have $500, you want to do $500 a month, we'll do $500 a month. We know that you're going to do that investment. You know you're going to do that investment. It's not going to necessarily be in the traditional form, meaning it might not be a pretty bar, but it's going to be gold. It's going to be real, and it's going to be 100% backed. And we're going to be storing it, enabling customers to get that in different forms. This is what people have been doing in other countries for generations, that is just rolling out in the United States. I'm just modernizing the delivery of it, providing the services that we're going to be providing. So we're doing it already, but it's not, the scale at which we're doing it is low, because an app needs to make it easy for everybody to go on and say, $500 right here. I'm going to Zelle it over to Alex Lexington. My order is locked. At the end of the year, what do I want to do? Do I want to keep adding more? Or do I want to, take delivery? So
yeah, I mean, but from a trending perspective, like Gary said earlier, the gold is, pretty and shiny. But is the real value in looking at other precious metals such as silver and brass? Are you seeing an uptick on the individuals from a consumer perspective that are coming in and asking you for that type of precious metal?
People asked me about copper in the last week. The thing is, I don't have access to it because the demand in industrial use has cut that off from coming to the retail space. People forget the retail space used to be about 5%. I would say we've ballooned to 20 to 30%. From my perspective, looking at where the demand on the market is, retail consumers were very low on the totem pole from a metals perspective. Copper is in the space because that's what's affordable to some people. Copper, you used to spend $2 on a copper ounce. I forget what the metrics are because it's not traditional ounces, troy ounces. But silver is going to soon be one of those things where it's the new version of gold, what gold was in the 80s.
You know, when we talk about returns, the spot gold is based on price only, as I understand it. There's no dividends, things of that nature. Physical gold also could possibly incur things like the premium, so we talked about that. Then there's the storage costs and things of that nature, because I hear you say take delivery. And so an investor has an option, either taking delivery, actual physical delivery of the gold, or perhaps receive a certificate and pay someone else to maintain the gold in a storage facility or what have you. Correct. So you do have some other costs that's associated with that. But that's not where I'm going with my question. My question now is that and I shouldn't say the only, but the ones that we're most accustomed to, and this is where education is very critical for people who's perhaps considering commodities or precious metals as a hedge investment or a portfolio add-on or what have you, is that how is it sold? Is it sold by carat? Is it sold by gram?
Okay.
You know what I'm saying? So that you can decipher.
There are standards by which all coins and bars are produced. Their sizes. So the smallest traditional size was 1 gram. Mm-hmm. So there was 1 ounce down to 1 gram. So 1 ounce, half ounce, quarter ounce, 1/10, 1 gram. If you're not in the United States, the ounce, half ounce, quarter, 1/10 were standard. Other places use grams, 1 gram, 5 gram, 10, 20, and the 1 ounce, which is 31.1 grams in an ounce for metals. These are the different sizes. Now, above that, there's 50 gram, 100 gram, the kilo is 1,000 grams. Those are some of the standard sizes. And these are intermingled between gold and silver. They come in these different sizes. Silver is not going to have some of the different variable sizes, but gold is. Now, once you get below 1 ounce, the premiums go up. Why? Because it costs more to manufacture. Now, I go back to keep stressing, people used to stress, I don't want to pay certain premiums. I had those customers for years. Oh, I need this, I need this. And then I said, you just want to get in the game at some extent. Once you get familiar with the game, your price opportunity becomes better, because now you know what works for you, what doesn't work. But going back to that only happens because of consistency. Now, I can't tell you what you're going to get. Everybody has different flavors, different budgets. Opportunity might present itself that you might get access to a bunch of 1/10s, a bunch of half ounce. The average consumer, I think the median purchase was like $3,000 to $4,000. Historically, that was the average thing that anybody would walk in the door and say, my first time going to metals, I want to spend $3,000 to $4,000. Now that might be 1 ounce of gold now, but I say, hey, if your budget is $5,000, we have a calculator on our website that you can say, I want to do gold and silver, I want to do the best price, and this is my budget. Plug it in, just see what it spits out. That's a feature that I've intricately worked on because I've had this conversation so many times, and I want to provide that to our customers at an easy rate. Just visit the site. This is a service that you can take it. Hey, if you don't like our prices, but you at least get an idea of what it's going to cost, what the market has available. Everything that I supply is typically major demand products. produced by the United States Treasury, the American Gold Eagle, the Royal Canadian Mint, the Australian Mint, and some standard private mints that are around the United States and global Swiss. So we have some features, some tools that you can use to figure what this looks like. And you can also see, if I were to sell this back, plug it into our another calculator we have, that's going to also tell you what you're going to get back. Now, you can't calculate, I'm going to buy today and sell today, but you can also say, hey, gold goes to $5,000 an ounce. Silver goes to $150 an ounce, which sounds me crazy saying it, but it's a reality that we're going to have to consider. These are some tools that I have available for people that are curious. This is my budget. This is what I want to do. And some things are available out there.
Mm-hmm.
Sorry. Did I answer your question, Smitty?
Oh, yes. Yes. I appreciate that.
Sorry.
Oh, yeah.
No. I know you were nodding, but I want to make sure that, your listeners, and some people have more intricate demands, but to fulfill the need based on what I've seen in the market, what customers asking me day in and day out, I don't want to devalue my service, but I want people to be able to get if you want to privately check, this is my budget. My budget's $1,000. My budget's $500. What does that get me?
Right. The reason I asked the question I asked the way I ask it is that most people are not accustomed to discounted cash flow or, net present value of investments. And so if you negate that, then what you're actually buying is the sizzle and not the steak, so to speak. Okay. And so I think that's why I said something earlier about the educational piece.
Correct.
And I really appreciate you coming on because you provide that, the educational aspect of understanding. I mean, Warren Buffett said it best. Don't ever invest in anything that you don't understand. And, you're able to appreciate the commodity. What's that?
I said, that's crucial.
Oh, absolutely. Absolutely. And so you need to understand, break that thing down, to 31.1 grams is what it is. Okay. And so when you're buying gold, either at the jewelry store or anywhere else, be an educated investor, be an educated purchaser.
I stress that so much. And I tell people, if you don't do business with me and you do business with anybody, if my customer is informed, it makes my life easier.
Absolutely.
Know what market rates are. Know what the premiums are going for.
Yes.
Know what's available in the market. I have a customer that said, she wanted to invest $100,000 and come in same day and pick it up. I said, ma'am, that's not realistic. There are so many different variations of products. The person that's going to provide that opportunity for you on the quick is going to probably, if gold could double and you might not get your money out. Ask me how I know this is reality. Right. Now, I'm not saying that people don't have it, but I'm saying is this isn't shoes. Like you said, the sizzle. These are the realities of the way the market operates. Mm-hmm. You need to be aware of that. So education is essential. I'm a big proponent. I'm the advocate for it. It makes my life easy. And I'm happy when I see people getting money. If you're getting money, that means I'm making money.
Yeah, that's the way it's supposed to be. So I shouldn't say one last question. I really enjoy this engagement here. Now, when we look at, and I like to go back to the day-to-day market prices and evaluations and things like that. What you were talking about earlier was like dollar cost averaging, buying gold, regardless whether it's at 4,600 or 3,500, it's going to go up and down, something right. Like that. Maybe not to the degree of volatility that the stock market does, but at the same token, are we in a bubble, if you will, or do you perceive that this whole metal?
I'll give you my personal opinion. These statements are made. You should take them as personal opinion. Go sit down with a certified financial advisor. So this is what I go into my personal opinion spiel. Everything I gave you was common sense approach and industry knowledge. Okay. At this point in time, I would say we're at 46.23, still going. My opinion is I don't think gold can ever correct and go below $3,600 to $3,800. Is it going to go there? I don't know. It may never go back down there. but that's my opinion. I always thought that silver should be around $60. Why? When the last run, because I've been in this for 15 years, the last run that we saw was 12 to 42. That was a quadruple from there, from a market perspective. We're talking about people that look at charts, education. So we were in the $20, $25 range. If it quadruples from 20 something dollars, then you're going to be in the 80 something dollar range. To me, the bottom of that is going to be 60. So if the market corrects, I don't think it's going below $60 and change. Is it going to do it? People want to say they want to wait. You may never catch, look, you're never going to catch the top and you're never going to catch the bottom. But if you're consistently doing it, you won't have regrets. That's the best thing I can tell you. So that's my opinion. Those are some numbers. But in COVID, people wanted to catch the bottom. You never caught that $18 again. I tell people, you try to catch the falling knife. May catch the handle, but you're more than likely going to catch the blade.
Good stuff. As usual, man, this has been a very interesting and great conversation. And a lot of information that our audience can really, delve into and understand, what that market is really like. As usual, I want to make sure that you tell the folks, how they can get in touch with you, because I'm sure, they want to have further conversation and if they do, like I did after we had our first visit, go over and invest, because I sure definitely, bought some gold and silver.
I got a ballpark in my head. George and his lovely wife, who was an artist, Sharon, came in, sat down, did their consult, and they did their investment. I just know in my head that he's making good money based on the numbers, which is what I want all my clients to have. AlexLexington.com is our website. You can go on there. We have multiple ways for you to interact with us. There's it's not a bot, but there's a chat component that you can reach out to us, set an appointment. That's what I encourage people to do. We operate by appointment. We do accept walk-ins, but you want to have personal time so you can sit down with myself, my wife, Danielle, if you're on the jewelry side of things. But we're talking investing here. You can go on the website. There's a calculator to calculate pricing on metals. You want to plug in and say, my budget is this. I don't care about value, or I do care about the brand. You'll have those options. I want to sell. Metals at an all-time high. I've done this many years ago. What is it worth? What can I get? There's a calculator for that as well. I've got some jewelry. There's a calculator for that as well. So these are things that have been by demand. My customers have been asking. We literally just launched the site Friday. You are the first people to hear me publicly say Alex Lexington has a brand new site, and it is operational and running, and storage is something that we're adding to to our services. I've been talking about it for probably like fourth quarter of 2025. Hopefully third quarter of 2026, it should be operational in some capacity, because it is a big undertaking. We are looking to provide a service that the Southeast, as far as I know, does not have.
Amen. Amen.
Good
Well, all
stuff,
right.
good stuff.
So y'all are the first to hear this publicly.
We're good. Well, as always on the Thecrotchet Old Men, I always want to end with some good words. What you got for us today, Smitty?
Well, I think this is a quote that I found is perhaps right on point here, and it goes like this. Everything we hear is an opinion, not a fact. Everything we see is a perspective, not the truth. That's by Marcus Aurelius, a philosopher.
Right.
So, when he says everything, I'm thinking, well, not everything, because there's some things that we hear that are factual. And there are some things that we see where it may be based upon our own perspective. Everyone sees things differently. But I'm so appreciative of what you have brought to the table this morning, Andre, in regards to the education, breaking it down to get people to think. All right. As we go into this year, 2026, there's a lot of options, and there's a lot of opportunities, and a lot of obstacles that's going to be out there. It all depends on which ones you feed the most is the one that you're going to reap. If you listen to the opposition or the obstacles, then yeah, that's probably going to prevent you from taking advantage of the options that you have, which will be in turn take advantage of the opportunities that's before you. I would encourage people to listen to the opportunities, because what this young man is bringing forth to us today is not only a wealth of education, but within the words that he just said, given his opinion, given his perspective, and given his expertise, I feel there's a lot of opportunities ahead of us in 2026. Man, God bless you. God bless your business. And may you continue to do what you've been doing, man.
Thank you, gentlemen. It's always a pleasure. Keep up the good work. I love listening.
Amen.
Absolutely.
Great day.
And as we always say on the Thecrotchetyo Old Man, if you didn't know,
Now
you
you
know.
know.
Take care. Be blessed.
Take care. Peace.